It is a lovely day. Adam is enjoying his time with nature. But, after some time, dark clouds appear on the sky. And here comes. What do you think all this indicates? After looking at these weather conditions, it is safe to assume it will rain. You won't believe this. But, if you can guess this correctly, you have an ability to become a successful trader. Hello YouTube. Welcome to Roller Coaster. This video is tailored, specially for beginners in stock market, and today, I want you to understand very basic concepts of stock market analysis, and how we have been using them in our day-to-day life experiences. In the previous example, let us replace the man with a newborn baby. What do you think the baby anticipates after seeing these dark clouds and hearing a thunderous lightning bolt? The baby might get frightened by the lightning. But, I cannot see the baby coming to a similar conclusion that it will rain. What do you think? Please leave your answers in the comments. Now, let us have a look at these two scenarios. Adam has already experienced these conditions in past. He has seen that on formation of these conditions, there are higher chances that it might rain. On the other hand, the baby has no such earthly experiences. There are two lessons that we can take from this example. First, before it rains, a special weather condition is formed. In other words, patterns emerge before it is about to rain. Second, by just knowing these weather conditions only, a person can predict rainfall with accuracy. Nothing else is required. And, just to be very clear, I'm not saying the person will be 100% correct each time, but the probability to be correct will be very high. In other words, before it rains patterns emerge, and, by using these patterns only, you can predict whether it will rain or not. Along with this, you have to understand, it will not rain each and every time these patterns emerge. The probability is very high, but never 1. I have taken a lot of time to explain these 2 points, as they lay the foundation for stock market analysis. Now, we are quite aware that Adam has an ability to understand patterns emerging before it is about to rain. In order to make profit out of it, he entered a betting game. The rules of game are very simple. Adam has to predict whether it will rain or not. If Adam is correct, he gets 100% profits. And if he is wrong, he loses his money. Adam has 10,000 with him. He takes a series of bets, putting 100 in each bet. That means, in total, he takes 100 bets, each and every time the pattern emerged. Let us consider that the probability of raining after these patterns is 80%. That means he won 80 and lost 20 bets. Let us have a look at profits. He won 80, making a profit of 8,000. He lost 20, losing 2,000. Total, he made a profit of 6,000. That is 60% returns. Let us decrease the probability of raining after these patterns. For instance, make it 70%. Again, he takes 100 bets, putting 100 in each bet. It rained only 70 times, and it did not rain for 30 times. Let us have a look at profits. He won 70, making a profit of 7,000. He lost 30, losing 3,000. Total he made a profit of 4,000. That is 40% returns. Till the probability to be correct, after a pattern emerges is greater than 50%, one will end up in profits. By now, you all must have understood, in this technique of analysis, Adam just looked for a particular pattern. And each time this pattern appeared, he predicted an outcome, and took a bet on that. And, just by this wonderful magic of possibilities and probabilities, he made handsome returns. Do we have a name for this analysis technique? Many of you must have heard about it. This technique is heavily used in stock market. Many of you might have even used it. This technique is none other than technical analysis. Let me give some more examples, to understand technical analysis happening around us. A patient visits a doctor. He mentions symptoms of his disease. The doctor does his preliminary diagnosis on the basis of these symptoms. Doctor then gets some tests done to confirm that these symptoms are nothing but the patterns emerging in case of a disease. Meteorological department studies the changes in temperature, pressure and air currents. They notice patterns and changes in air currents, and the department is able to alert the authorities regarding the incoming cyclone. From making an excuse to a friend, For not attending a function, to a couple who can anticipate the reply from other mate, there are patterns. In this case, patterns are behavior of a person, how they react to a situation, or their likes and dislikes. Technical analysis is a vital part of our life. We have been using it, knowingly or unknowingly. This same technical analysis is heavily used in stock market as well. Now let us understand technical analysis in stock market. Don't forget to like this video and please subscribe the channel. Before we proceed further, let us see a proper definition of technical analysis in terms of stock market. Technical analysis is a research technique to identify trading opportunities in the market based on price movements and patterns created. A technical analyst identifies these patterns and develops a point of view for trade. They use stock chart to identify these patterns and study the behavior of stock. One of the greatest versatile features of technical analysis is the fact you can apply technical analysis on any asset class, as long as the asset type has historical data. Like any other research technique, technical analysis stands on a bunch of assumptions. First one, and very important one, markets discount everything. All known and unknown information in the public domain is reflected in the latest stock price. For example, there could be an investment house buying a company's stock in large quantity, in anticipation of a good quarterly earnings announcement, backed by their research and analysis. Though they don't declare this immediately, but the price starts reacting to their actions. Thus revealing to the technical analyst, this could be a good trade to buy. In other words, it says to follow the price and nothing else. Smart money is responsible for a stock's price. These are people or institutions with large capital and resources. Their decisions to trade or invest in stock are backed by high-quality research. Following the price is actually following them. While performing technical analysis, you are not even supposed to look into income statements, balance sheets and cash flows of a listed company. You just have to read the price patterns and that's it. Next assumption is an extension of first. What is happening is more important than why it is happening. A technical analyst would not be interested in questioning why the stock price is increasing or decreasing. He or she simply participates. Third, price moves in trend. All major moves in the market is an outcome of a trend. The concept of trend is the foundation of technical analysis. A technical analyst is supposed to follow the trend, as once the trend is established, the prices moves in direction of trend. And last, history repeats itself. The price trend tends to repeat itself. This happens because the market participants, as per their human behavior, consistently react to price movements in a remarkably similar way. Over time, the actions of market participants form trends and patterns in stock charts, and these patterns convey a certain message. In next videos, I'll discuss these patterns in length. If you have any questions, please post in comments section. I would love to clarify those. Thank you.